Bem-vindos ao segundo webinar da série Reforma Tributária. O que podemos aprender com a experiência internacional do IBS, do VAT, que houve em tantos países europeus e pelo mundo todo, do Núcleo de Estudos Fiscais da Fundação Getúlio Vargas. Meu nome é Eurico Santi, sou professor da Escola de Direito da Fundação Getúlio Vargas e tenho a honra de dividir a coordenação do Núcleo de Estudos Fiscais com o professor Isaías Coelho. Eu queria consignar que este evento está sendo transmitido pelo canal da escola no YouTube. Além disso, também está sendo transmitido pelos participantes, pelo canal do Zoom, com tradução simultânea, inglês e português. Para isso, basta acionar o botão na barra de ferramentas, o botão PT. Queria ainda chamar a atenção para que as opiniões expostas neste evento não se confundem com as opiniões e posições institucionais da Fundação Getúlio Vargas e que todos os aqui presentes concordam em participar deste evento e que autorizam o uso da sua imagem pelos canais oficiais da Fundação Getúlio Vargas. Esse evento de hoje também é coordenado e foi viabilizado pela professora Melina Rocha, da York University, e pela professora Rita da Feria, professora catedrática da University of Leeds, no Reino Unido, aqui no Brasil, conhecida como padroeira da Reforma Tributária do Brasil. Santa Padroeira. Nossas especiais boas-vindas à professora Marta Paps Almansa, professora catedrática da Universidade de Lund, na Suécia, fundada em 1966 e reconhecida reiteradamente como uma das 100 melhores universidades do mundo, destacada pelo empenho em promover o desenvolvimento econômico, humano e social, muito em sintonia com a linha central de pesquisa aqui da Fundação Getúlio Vargas, em especial da Escola de Direito, que é a relação entre direito e desenvolvimento. Por fim, eu gostaria de dedicar este evento à memória do professor Richard Burt. Há 10 anos, o Núcleo de Estudos Fiscais vem se esforçando nesse trabalho dessa aproximação difícil de como ajudar o desenvolvimento econômico e social através do direito, e nós encontramos, dentro do tema da reforma tributária, a nossa grande meta, e graças à inspiração trazida pelo professor Isaías Coelho, aqui presente, nós conseguimos, aí, no decorrer desses anos, efetivamente, pautar o debate academicamente e que, de fato, hoje em dia, a professora Marta, vem acontecendo, de fato, um debate muito bem informado e muito bem constituído nesses últimos 10 anos sobre reforma tributária. Há 10 anos, também esteve aqui no Brasil, no primeiro evento oficial internacional do Núcleo de Estudos Fiscais, o professor Richard Burt. E eu me lembro da fala do professor Richard Burt, que foi muito marcante, que ele disse que ele se sentia como uma espécie de Dr. House, fazendo uma alusão àquele seriado Dr. House, daquele médico diferenciado. Ele se sentia uma espécie de Dr. House que viajava pelo mundo inteiro, cuidando das patologias e das doenças do direito tributário nos mais diversos continentes e países do mundo. Ele já conhecia todos os problemas: complexidade, tributação em cascata, conflitos federativos, conflitos de competência, mas que depois de passar 2 dias inteiros aqui no Brasil discutindo tributação e problemas da reforma tributária no Brasil, ele ficou muito impressionado, porque ele disse que nunca tinha visto todos esses problemas juntos no mesmo país. Eu queria convidar o professor Isaías Coelho para dar as boas-vindas à professora Marta e fazer também a abertura desse seminário. Professor Isaías Coelho, nosso grande inspirador e guru, por favor.
Muito obrigado, professor Eurico. Let me speak in English to give my welcome to Professor Marta Paps Almansa, who honors with her presence this series of webinars that we are conducting in order to bring new ideas and to the process of tax reform that's taking place in Brazil at this time. This is a work in progress, and we are really happy to have such a great scholars joining our effort. Thanks, Rita. Thanks, Melina, for bringing Professor Papsalmansa to talk to us today. And we have hope that I'm sure we have a great session. Thank you very much.
Thank you very much for invitation, and it is an honor and pleasure for me to be part of this series of webinars and to present on my favorite topic on VAT and financial services.
Marta,
I think
can
Rita,
I interrupt you?
Say yes, of course.
We want to say a few more words before you start your presentation, if that's okay.
Of course.
So first of all, welcome to this seminar series. We are truly delighted that you're here. I'm just going to say a few personal words about Marta before she presents. I have known Marta for a long time, since she was a baby academic. So I knew her when she was doing her PhD. Marta was supervised by a good friend of mine, Oscar Henkel, who unfortunately died 3 years ago, and who is greatly missed. And she has taken over the teaching of consumption taxes in Lund, in Oscar's memory, but also on the memory of Ben Terra, who unfortunately has also passed away. So Lund has had a lot of tragic losses in the last few years. And Marta, together with Cecile Brooklyn, has taken over in Lund and has made, I'm sure, Oscar and Ben very, very proud. So I wanted to say just that very small note of welcome to Marta. I'll pass now on the words to Melina, who will introduce formally, without the emotion, Marta to everyone, and say some words as well about Richard Byrd, who was a colleague to all of us, but a particular friend to Melina.
So good morning, everyone. I'd like to share quickly here some memorial to Professor Richard Byrd that was made by his family and his colleagues and everybody who liked him. So with great sadness, yesterday, we sadly got to know that Professor Richard Byrd suddenly passed away last week. It would be very difficult to talk about Professor Richard Byrd and his work in a few words, but all we can we can all agree that Professor Byrd was one of the greatest tax and VAT scholars in the world. He left a legacy of hundreds of publications, 45 books, over 200 articles in books and in journals, and many other contributions. So for those who don't know him or never read him, I invite to see his publications online. They're almost all of them available online. And besides his academic contributions, Professor Byrd was very knowledgeable. As Eurico said, he knew a lot about the reality of many, many countries, especially Brazil. And he was an extraordinary human being, very generous and kind. He will certainly inspire us in the tax reform discussions in Brazil. Last year, he participated in a seminar promoted by a BDF and IFA Brazil, and he presented and discussed some alternatives for our tax reform in Brazil. So we offer here our sincere condolences to his family, friends, and all his colleagues. So now I'm gonna pass to, I'm gonna introduce to our guest today, Marta Papsalmansa. She's senior lecturer at Lund University and Kristianstad University in Sweden, both in Sweden, where she teaches indirect tax in master's program in European international law. So she's specialized in issues of European VAT, and her academic work includes European Union law, European international law, comparative tax law, and her doctoral thesis was about VAT and insurances, providing a deep analysis, legal analysis of the treatment of insurance in the harmonized system in European VAT, comparing with the treatment in New Zealand and Australian GST systems. And in 2017, she received the prestigious Maurice Loret Prize by IFA, International Fiscal Association, for this research work. And also she received the Oscar II scholarship from Lund University for the most prominent doctoral thesis at School of Economics and Management. So it's a great pleasure. Welcome. And I pass to you, Professor Marta.
Thank you very much for this really nice introduction. As I said, it's a great honor to be here and to present on the topic of VAT and financial services. I will share my screen as I have a presentation with me. And as you mentioned, Melina, the topic of my PhD thesis was insurance and VAT, and that's the part of financial services I think that is closest to my heart. Anyway, for today's presentation, I took a little bit broader perspective, and I will, although giving some examples from insurance sector, I will talk about other financial services as well. So the plan for today and for my presentation is to firstly give a brief overview on the history of exemption for financial services in European VAT, and share some reflections also on the purpose of the current treatment. Then I will move to the topic of whether and why are financial services difficult to tax? What is so special about them that they do not fit easily a simple transaction-based general indirect tax on consumption expenditure? In the next step, I would like to reflect on the current treatment and on the problems stemming from that treatment. And finally, as the final point of the presentation, to reflect on alternative treatments, those that have been developed either theoretically but never tested really in practice, and those that have been alternative treatments that some other jurisdictions other than European Union in European Union VAT have implemented and have been using. So starting with the background history and the purpose of the exemptions. Financial and insurance services are to a larger or lesser extent, but they are exempt in all VAT systems. There is no jurisdiction that would fully tax in VAT all types of financial services. And when we look at the European Union VAT, on the harmonized system of European Union VAT, we have quite extensive list of exemptions for financial services. There is, which I will talk about a little bit later, also an option to tax that can be implemented by the member states. Option to tax financial services with an exception of insurance, for which there is no option to tax. When we look at some other jurisdictions, well, there is an exemption for financial services as well. In many of them, the scope of that exemption is somehow narrower. And I also will comment a little bit on that when looking at the alternative treatments later. So what is if we try to look at the EU system background and history? Why do we have the exemption? When we look at official documents and we look, for example, at explanatory memorandum to the proposal for the 6th VAT directive, we have this one sentence that exemptions, other exemptions, including exemptions for financial services, are justified for reasons of general policy common to all the member states. There is not much more explicitly stated in the explanatory memorandum than that. the background to that, or the actual purpose, can be found, first of all, in the fact that financial services have been exempt in the VAT systems, in the tax systems of the member states before the 6th VAT directive in '97 was enacted. So it was in a way already there. And the main reason that is being given also nowadays is that, well, these services are difficult to tax. It's difficult to apply this transaction-based tax to financial services. And that technical difficulty is still till today explained as the main reason for exemption, even though the technology has been moved on and has been developed since that, even though theoretical also models for taxation of financial services have been developed, and it has been discussed quite extensively in the literature that it is possible there are methods for taxing financial services. Another reason that has been also appearing in the judgments of the Court of Justice of the European Union as an explanation for exemption, and as an element then of purposive interpretation of the provisions of the VAT directive, is that, well, the purpose of the exemption is that we do not want to increase costs of consumer credit. But as those who listened also to the presentation from the 9th of June by Professor, we know that exemptions or even reduced rates is not the best way of addressing such issues. Direct subsidies work much better than actually either reduced rates or even less exemptions that distort neutrality of the system. In the context of some of the financial services, and for example, insurance transaction, it has been also argued that, well, there exist also other taxes. For example, some member states have insurance premium taxes for insurance contracts, and therefore, to avoid a sort of double taxation, there should be also no VAT imposed on this type of transactions. Those arguments are not really convincing. This is not really the reason why we should have the exemption. The technical difficulty is I think, still the main one. And also European Union and the Commission in many of the reports have earlier stated that as soon as there is a feasible solution and technical solution for taxing financial and insurance services established, full taxation is recommended and should be introduced. Whether we indeed will go in that direction or not, the future will show us. There is an ongoing reform also of the treatment of financial and insurance services in VAT going on in European Union, and a proposal from the Commission is expected in 2021, so hopefully soon. There is no proposal yet. But where this difficulty, this technical difficulty to tax insurance, where does it come from? Well, as you know, value-added tax is a general indirect tax on consumption expenditure, and it aims at taxing consumption expenditure. Certain flows, cash flows in economy, such as pure transfers of wealth that are not linked to consumption and are not linked to production, as well as savings, they in principle should not fall in the scope of VAT. Savings, they only postpone consumption, but when consumption takes place in time should be neutral from the perspective of VAT. And when we talk about financial services, their nature is as that it includes bundled types of cash flows or elements that are impossible to separate on a transaction by transaction basis, or at least for some of them. So it is difficult to separate the actual consideration so the expenditure for consumption, from those elements that should fall outside the scope of VAT. And therefore, it is very difficult to determine on a transaction by transaction basis what is a taxable amount. What is that is actually being received in consideration for the services that are being rendered. If we talk about, for example, loans or forex transactions or even insurance, taking the loans, the bank lending the money and the bank also getting deposits, it's the intermediation between borrowers and lenders. If we tax the entire value of the money paid in a loan, that will be overtaxing it, because part of that is just savings or pure transfers of wealth. Not everything constitutes consideration. It's actually the difference between all the between the deposits and the loans, and what the bank can in the end of the day keep in its own hands, that is closer to reflecting the actual consideration for financial transactions. And this is impossible to establish at the level of a single transaction. Also with forex transactions, when we exchange 100 euro for 1,000 Swedish crowns, what's the actual value of the financial transaction here, of the service being provided? We just, it's a sort of exchange money for money. To know what is the value for the person who is exchanging 100 euros, we would have to know what was the value of that 100 euros at the moment when the person acquired that 100 euros. That is impossible. This is all, interest margin based, so to speak, services. It's simply too complex to know what the consideration is. But there is also something more in characteristics of financial and insurance transactions that cause certain problems, not directly contributing to the rationale for exempting them, but in a bit broader perspective, adding to the complexity of how also apply other rules of VAT system to such transactions. And that is that, taking, for example, insurance, it often involves very complex contractual arrangements that involve very often more than two parties. And that is also with other financial services. Who is supplying what to whom? How to find out those two parties of transactions that we need to identify in VAT, the supplier and the recipient. That is also not always so straightforward. And also needs to be, I think, taken into consideration. The actual economic and commercial nature of financial services need to be appreciated to understand how to apply also more other rules of VAT system to such transactions. So, looking at the system in European Union, what categories of exempt financial services do we have currently? As I mentioned, the European system is providing for a very wide scope of exemption, in the sense that it covers basically all the types of financial services that represent the fundamental functions of financial systems in economy. We have insurance transactions, we have credit and guarantees for credit, we have payment and currency transactions, we have transactions in shares, debentures, and other securities. And finally, we have also management of special investment funds. And when it comes to that latter category, when it comes to management of special investment funds, that is the only exception from perhaps the fundamental functions of the financial sector. But all the others, basically intermediation between borrowers and lenders, pooling risks and pooling money, transfer of funds between parties from one party to another, and payment intermediation, also trade in financial instruments, so creating and maintaining markets for that and infrastructure for that. These are the fundamental functions of the financial system. And also, if we look at the interpretation by the Court of Justice and of the provisions in the VAT directive, those transactions well, the interpretation also and the way the provisions are formed, they try to exclude from the scope those services such as, for exemption, debt collection is not exempt. So those services that in a way do not fall under that central financial sector functions and roles. So it's the core financial services that are aimed on being exempt. But what are the current problems? Well, I will not say anything new here, stating that exemptions are abhorrent to the legal character of VAT. They are inconsistent with the principle of fiscal neutrality, and they lead to many economic distortions. We know that in VAT, who is taxed is actually exempt, and who is exempt is actually taxed. Being exempt and not being able to deduct input VAT leads to severe economic distortions, make it very difficult for financial service providers to outsource. So it impacts the way in which the business operates, and that is also inconsistent with the principle of fiscal neutrality. It adds a lot of complexity to the system. And that complexity is, I think, even larger in the context of European VAT, when we have different member states that implement, various member states that have to implement the provisions of the VAT directive, and often do it in an inconsistent way, not being sure what the actual scope of the exemption is, for example. And that leads to also lack of legal certainty, complexity for businesses operating cross-border, making interpretation of the existing rules overly complex. It is difficult for both businesses, but also tax administration, to understand how the rules should be applied in practice, which services fall within the scope of the exemptions and which of the services do not. And that also adds to the administrative costs and, of course, compliance costs for businesses. A little bit more on the scope of the exemptions and the problems with interpretation. Well, there exist some obstacles to linguistic and purposive and contextual interpretation when we think about the methods that are used by the Court of Justice of the European Union. Well, first of all, there is not a lot of definition in the directive on services taking insurance. The directive basically just says that member states must exempt insurance and reinsurance service transactions, including related services provided by insurance agents and insurance brokers, but there is no definition in the directive itself of the insurance. Considering that we operate with, in the context of various legal systems of the member states that have different insurance laws, different contract laws, it is impossible to link the definition in VAT to a particular definition in another branch of law. It is undesirable because in the context of European VAT that is harmonized, we have independent concepts in the directive, which means that what is insurance in the directive has to be given exactly the same meaning in all the member states. In the meantime, the sector is very quickly developing. New services are being provided and developed, and it becomes more and more complex to determine whether they're still insurance or perhaps not. Maybe they are other financial services, or maybe they are outside the scope of VAT at all, or maybe they should be taxed. Furthermore, we have to also, as I mentioned, the purpose. Well, a pure technical reasons, this is not an easy, that also doesn't really help to interpret exemptions, because if we think about it, well, the purpose is to exempt those services that are difficult to tax, but it is possible to at least in the wide selection of the financial services, it is possible to single out certain of the services, for instance, those that are for explicit fee, that therefore perhaps should be taxed, but that is not, of course, how it should be if it is written in the directive that they are exempt. So it doesn't really help so much purpose of interpretation, neither here. And when it comes to also interpretation in the context of European VAT system as such, we have also two principles of interpretation, two principles that in a way lead to opposite result if we apply them to exemptions. So one of them is that we have to interpret exemptions strictly as they are an exception to the general rule that all goods or services in VAT, in general tax on consumption, should be taxed. So we have to be strict. We cannot go beyond what is really intended by the provision, what is in the scope of the provision. We cannot widen up the scope, but at the same time, we have to interpret in a way not to discriminate and to treat in the same way the services which from the perspective of the customer perform the same function. There is a lot of case law by the Court of Justice on the scope of the exemptions, and that also the litigation in the field is, I think, also increasing. Court of Justice provides some clarification, but since it's case by case, on a case by case basis, there is still a lot of uncertainty and a lot of questions. But as I mentioned, to just give an example, and again taking insurance, to illustrate this struggle on how to determine the scope of exemptions, we have a definition by insurance that the Court of Justice developed in the early case law on interpreting of the provision exempting insurance. And that definition stresses certain important elements that there need to be for insurance to be insurance in the meaning of VAT. And the first element is that there needs to be a risk assumption by the insurer. If there is no contractual obligation to according to which an insurer undertakes in return for prior payment of a premium to provide a certain service or certain compensation if the risk materializes. So that assumption of risk and the contractual relationship between the insurer and the insured is the central to the concept of insurance. But at the same time, it doesn't matter whether the provider is an actual insurance company, that is because of the principle of neutrality. So it's the nature of the service. On the other hand, those services that are also very important parts of an insurance arrangement, insurance contract, such as assessment of damage, such as claim handling, even transactions as transfer of portfolio of insurance or reinsurance contract, these all, they do not include as such a contractual risk assumption and a contractual relationship between insured and insurer, and therefore they are not exempt as insurance if they are, of course, outsourced and not provided by the same party that is providing the core insurance. So from the case law, just very briefly, for instance, road assistance services provided by a company who is not an insurance company, but a certain association, that is insurance according to the Court of Justice, because there is a risk assumption in exchange of some fee paid in advance, membership fee to the association. And that is according to the court insurance. As extended warranties for products when provided not by the producer or the seller, but by the third party, this is also insurance, because in essence, it is a situation when one party undertakes a certain risk, undertakes to provide a certain service if that risk materializes and there is a contractual relationship. But as I mentioned, transfer of portfolio of insurance contracts, damage assessment, claim handling, back office services, these all are taxed if provided, if outsourced by the insurance company. They are not insurance proper. Is my screen being visible? I just have an impression that I have some notification that it's paused, but can you see it?
It's on the slide that is titled Scope of Exemptions. So I'm not sure if you had moved your presentation further. Okay. It's the same slide.
Aha. Yeah.
Yeah.
I'm very sorry. I will just share again. This is now the slide I got a notification that it has been paused. I'm sorry for that. I might have clicked something while speaking. So I think you perhaps then didn't see this slide. This was the one I was commenting on a moment ago. But moving on to some other difficult areas, and that my previous example related to the scope of the exemption. But what are the other difficult areas or problematic areas? Well, first of all, outsourcing. And that's in the relation to what we've seen and what I have just seen about, for example, the claim handling in the context of insurance, but it also relates to other financial services. If it is not the core of the financial service in the way the Court of Justice defines it as it follows from the case law, then it will not be exempt, and that will be a major problem for providers of exempt services, because of course in that situation input VAT cannot be deducted by banks or by insurance companies or by other providers of financial services. There is a little bit also of a problem of intermediation, and by intermediation I don't mean a financial intermediation in the sense of intermediating between lenders and borrowers. I mean here services by agents, such as, for instance, services by agents and insurance agents and brokers. How to treat derivatives. There are also quite complex financial services that might potentially fall to different categories depending on the type of derivative. And furthermore, borderline issues between, well, tax exempt, that's one, but also outside the scope transactions. And that area is still, I think, not fully broadly and well understood. It is still requires some clarification. But for instance, some of the financial transactions, such as acquisition of sale of shares by ordinary companies, if it's not, they're the kind of a business. If it is just, ordinary acquisition or sale of shares by holding companies or by other companies, according to the Court of Justice, that type of activity can be compared to the activity of private investors and does not fall in the scope of VAT at all. So also to distinguish between these that are outside the scope and those that are inside the scope of VAT but exempt is not always easy and straightforward. And finally, a problem with deduction of input VAT by the providers of financial services in situations when they deal with both taxed and exempt, and situations when they deal with both out of scope and in the scope transactions. The deduction has to be established based on a pro rata, and that is not easy then how to do it. As you remember, I mentioned in the beginning that one of the fundamental difficulties is to determine what is the taxable basis, what is the really turnover for financial transactions. And here you kind of have that problem appearing back when you have to determine the turnover of, from the financial services in order to calculate the pro rata deduction. And then also the issue with management of investment funds. That is also a little bit tricky area, because management, when investment funds on one hand is a vehicle for savings, it can also, life insurance is very often in a form of investment fund, and there are issues of actually not equal really treatment depending on the type of the fund. Some of those funds are being managed by insurance companies, but such management is not exempt as insurance transaction. It can be in certain circumstances, on the other hand, exempt as management of special investment funds if certain conditions are fulfilled, as it follows from the case law of the Court of Justice, basically when the risk of the result is on the beneficiaries, so on the persons who invest their money in that fund, and it is also based on a risk pooling basis, then it can be exempt as management of investment fund if it's also by irrespective of who is the managing the fund, so also insurance, life insurance companies. So some issues, borderline issues also on that aspect. Some of the negative consequences which we mentioned can be alleviated by use of, for instance, VAT grouping. Until recently, we also had cost sharing exemption for independent group of persons, which it is a little bit similar to the VAT grouping when it comes to the rationale and the, not really the final result. It is a different technique. So when VAT grouping is really considering several independent persons as one taxable persons for the purposes of VAT, in the meaning that then transactions between the members of the VAT group are not existent. But when it comes to cost sharing exemption, that is, there are other requirements that need to be fulfilled, and that cost sharing exemption means that when a group, cost sharing group, provides certain services under certain conditions to the members, they are exempt. But in line now with the case law of the Court of Justice of the European Union, cost sharing is not available any longer for financial sector, for providers of insurance and financial services. So according to the interpretation by the Court of Justice, it's not possible to any longer use that. It was used in practice by many of the insurance companies and financial service providers, not possible anymore. And finally, there is an option to tax introduced in the VAT directive. And what does it mean? An option to tax basically gives a right to member states to provide an option for the providers of financial services to tax financial services. And member states have quite large discretion when it comes to determination of the conditions, but also types of transactions that are to be covered by the taxation. And they also basically, in principle, of course, there are certain limits to that discretion. They cannot be discriminatory. They have to be in line with the general principles of union law. But when it comes to the design of these rules, member states have quite large discretion. And currently, there are 6 member states that have that option introduced: Germany, France, Belgium, Austria, Estonia, and Lithuania. And also when it comes to design of those different systems, they vary quite a lot. Without going into details which country has which systems, some of them have a condition that the customer of the provider of the financial services is a taxable person or has a particular minimum scope of the right to deduct in order to be able to opt for taxation of the supply of financial services. Other legislations determine that it's irrespective of the customer's status. Some have rules that say, well, if you opt for taxation, that will be valid, let's say, for 5 years. For example, France has such a condition. Others say that you decide on a transaction basis. Some also have a quite broad scope for that option. So most or all of the financial services can be opted to be taxed. Others, for example, Austria determines that only sale of goods with granting of a credit. So granting of a credit, when it is done together with a sale of goods, then it can be one can opt for also taxation of such a granting of a credit, but otherwise exemption is applicable. It is difficult to find any specific provisions that would determine in those member states where there is an option to tax how the taxable amount should be established and what is the taxable basis. In practice, it seems that it's the gross amount on which then the VAT is being imposed, which, as we mentioned before, is not the correct result. That is overtaxing financial services. So this departs quite significantly from the theoretical considerations and from the character of VAT. An interesting issue that perhaps, I will not comment on it very much, just mention it, is that it's also interesting how or what issues arise in cross-border transactions when a provider or when the option to tax is being chosen by the parties to the transaction, but it takes place cross-border. We already also know from the case law of the Court of Justice that it can have an impact on the right to deduct by businesses or financial institutions that are located in a member state when there is no option to tax, but incur certain input VAT in relation to transactions that are being performed in other member states where there is an option to tax, and that option to tax is being chosen, and therefore potentially also impacting the scope of the right to deduct by such businesses. So many interesting cross-border issues. Now, what are the alternative treatments, or what are the other possible ways forward, if not exemption? I will start again from insurance, because I find it a very good example of a sort of a cash flow taxation, one could say. So, and I looked at two systems, and these are not the only two systems in the world that tax general insurance, but I think they provide for quite a good illustration on how general insurance, and general insurance means property and casualty insurance, not life insurance. Life insurance is still treated in most of the jurisdictions as exempt because of the quite significant saving element included. But general insurance, basically a pooling arrangement, pooling of money, pooling of risks of different interested parties. It is conceptually established that what should constitute a taxable basis for insurance services is actually the difference between all the premiums that are being paid by taxable by insured persons, and then all the claims being paid by the insurance company to those whose risks materialize. And that difference is the value added by insurers, and that is exactly what should be taxed in VAT. And both New Zealand and Australia has a system of taxing that value added. So how is it being done? Well, in essence, firstly, all the premiums are being taxed at the standard rate at the moment when they are paid. And that means that, well, it is a tax transaction. So the insured person who pays premiums with VAT, if it's a business, then they will have to write to deduct GST on the premium. It says GST, not VAT, because it's actually called GST in both Australia and New Zealand, but it's in essence VAT, and I don't mean to confuse you, just explaining why suddenly is the GST appearing here. And then insurer has also a right to deduct input tax on all the purchases that are attributable to tax insurance, hence it's taxed insurance, so it gives right to deduct. And then what happens when the claims are being paid, that allows to actually achieve that proper result, is that there is a system for deduction, for a credit to be given to the insurance company for the tax element of the claim payment. So when the claim is, and I explain it in my next slide, maybe it's easier with a little bit of a drawing. But so that's this treatment of the claim payment that is a little bit special, and it's also different both in New Zealand and in Australia. I think in Australia it's even more complicated. There is a special decreasing adjustment mechanism for that. So I chose to focus on the New Zealand and explain it on the New Zealand system, as it's a little bit more straightforward. But the idea behind those two systems is the same. So here in my first graph or drawing, I have policyholders, insurance policyholders with full deduction right. So what happens is that when they purchase insurance from an insurer, they will pay premiums plus VAT. And in that situation, the insurer will have to charge that VAT and then also remit it to the tax authorities, of course, will have a right to deduct input VAT. The policyholders with the full right to deduct VAT will deduct that VAT on insurance. And then let's say that to person number 6 in that picture, well, he is unfortunate and he has certain damage. And then he, of course, claims the insurance benefit payment from the insurer. And that's because he's a taxable person with the full right to deduct. That is being treated according to the provisions of New Zealand VAT, GST, as a deemed supply by the insured, by the policyholder to the insurer. So the payment is a deemed consideration, which means that the policyholder has to remit that VAT element of the payment to the government. He has no obligation to issue invoices in New Zealand. Well, it's a small country, not that many insurance companies, not so difficult to handle. Maybe that, for sure that would be a little bit more difficult to handle in European Union, perhaps in Brazil as well. But the principle is simple. It also makes it a little bit more straightforward to insurance companies to determine how much they have to pay as the insurance benefit payment. Because how is it in exempt systems? Well, like in European Union, well, you basically, as an insurance company, before you pay the benefit, you need to know if your customer is a business or if it's a consumer, if it's B2C or B2B. Because if it's a business, well, he has a right to deduct. So whatever damage he has, the payment should be only for the value without VAT. If it's a final consumer, you have to also top it up with VAT because he will not have a right to deduct on the replacement good or the repair services. So that's always a different value depending on the status of the customer. In this system, no matter if you're dealing with a final consumer or with business, you will always pay the same. You will always also pay VAT. The difference will be that if it's a business consumer, he will have to pay that VAT to the government, to the tax authorities. And if it's a final consumer, well, if you look at my other drawing here, the difference is the payment is still 230 with the GST element, but person number 6 will not pay that VAT to tax authorities. No matter what happens with the GST in the insurance benefit payment, the law provides that the insurer has a right to deduct that GST element included in the insurance benefit payment as its input VAT. So even if it's not a deemed supply and not deemed consideration and there will be no money paid, it is going to be deducted by the insurance company. And here, if you perhaps a little bit later, I will not go through all the numbers, but the result is correct from the conceptual point of view, and in principle, the system works well. As I mentioned, in Australia, this is a little bit more complicated. Of course, the situations of persons who have partial right to deduct are also a little bit more complicated. Then a special formulas have to be used, but it is all, well, this example shows it's doable and it works pretty well. Moving on to other examples when it comes to now without detailed analysis and examples. As I mentioned, there is no state that would fully tax all financial services. However, many of the jurisdictions have somehow more limited scope of the exemption. Many of the countries tax, for instance, services that are for explicit fee, which I believe it's a correct thing to do. And if somehow we could reduce the scope of the exemptions that we have right now, introduction of VAT for those services that are done for explicit fee, that are made for explicit fee, should be recommended. Also, intermediation agent services, these are in many of the countries being also taxed, in South Africa, for example, in Singapore. Some of the countries, well, one in particular that I have in mind now, New Zealand, also has a sort of qualified exemption, which is an option to zero rate supply of financial services under condition that the recipient is a person with a business that has at least 75% of the right to deduct input VAT. So the scope of the right to deduct is at least 75%. And in such situations, there is a right to provide those services without VAT. There is a condition then that the price for those services has to be lower. So it cannot be a kind of a hidden VAT. There are formally zero rate by a hidden VAT. And there are even kind of guidance on how to calculate the consideration for this sort of services. And zero rating is indeed one of the also possible options. It's definitely addressing the problem of economic distortions or stemming from the lack of the right to deduct and the problems with outsourcing, but it is quite costly solution in the sense that then the revenue is a lot of revenue is being lost if we zero rate. And also on that input side, that is also a solution that some of the jurisdictions have implemented. So Singapore and also Australia have a certain mechanisms to calculate. So the services are, financial services are exempt, but providers of such services has a right to deduct at least part of input VAT related to those services based on, well, in Singapore, it's a fixed recovery rate. So there are calculations for different types of businesses, and it's a rate that is established that basically it's estimated on based off turnover, and it can vary from 42 to 98%, depending on the type of the institution of the input VAT that can be deducted. And then we also have a reduced input tax credit in South Australia, which in essence is a similar system, again, a little bit more complex than that, but I will not also go maybe in detail as I'm falling behind the time. On a theoretical, conceptual basis, systems for taxation of financial services have been quite broadly discussed. And one of the most recommended one that has been recommended by the literature, also by a report written for the European Commission, has been a cash flow mechanism. And it has several versions, the simple one, and then the truncated one that was the one that was recommended as addressing certain adjustments that have to be done when using a cash flow system. It has been considered to be conceptually really precise and to a high degree reflecting the value added and the value added created for the financial services and the tax basis of financial services that should be taxed in VAT. And it is in essence very similar to what we've seen with the example of insurance. So when we have loans, it's basically cash in, we tax the full amount, and then when it's paid back to the, when it's paid to borrowers, then on cash out, and then we also deduct that VAT that is included in that payment. The truncated version addressed the problem of many parties and businesses being involved in financial cash flows, so that only real financial sector entities would have the obligation to impose VAT or deal with VAT. Nevertheless, it has been considered to be still complex, mostly because it's new and not really known yet. And hence the skepticism by mostly financial sector didn't determine that this has been never introduced and not tested in real life situation in any of the states. There's been also some other, this is not comprehensive, my slide here in any way, some other solutions. For instance, Z proposed a modified reverse charge system. And the discussion and academic literature in the field also includes discussion on substituting taxation in VAT by other taxes, financial transaction tax and other types of taxes, which, however, is not fully, it is not going, imposing another tax can bring some, of course, revenue, but it will not solve the issues and it will not substitute the proper reform of the VAT system itself. And this is, I think, my final comment on the future of the treatment of financial services in the European Union. There was a proposal already in 2007 in the European Union to change the treatment, to reform the treatment. Although I would say that at that time it was not really to reform, it was rather to repair, in a sense that there was no full taxation proposed at all. The reform or the repair related to mostly at the end of the discussions, the focus was on redefinition of the list of exemption, or better definition of which services should be included in the list of the exemptions. There were also discussions relating to the special and broader, perhaps, scope of this cost sharing exemption for independent groups of persons providing financial and insurance services, and the option to tax to be obligatory in all member states, in the sense that it would be in every member state up to the taxpayers to determine whether they want to use the option to tax or not. Still, it was not proposed that that option would be also for insurance, and I don't know really why. Hence, as I showed, general insurance is one of those services that very easily can be taxed in VAT. So we will see what the current proposal will bring about. It was the 3rd of May that public consultation has finished, and now a proposal is expected by the end of 2021. As the two main possible policy options, it was early introduced that it will be either to remove some existing exemption in order to tax financial and insurance services, or, which is more probable, to keep the exemption but to modify its scope, perhaps make it not as wide through taxing only some of the types of services, and also provide for broader possibility of mechanism to alleviate the negative consequences, such as cost-sharing arrangements available both cross-border and for the financial and insurance businesses, which is currently, as I mentioned, it is not available because of the case law and the interpretation of existing rules. We will see what the future holds. Thank you very much, and I look forward to hear your comments and questions.
Muito obrigado, professora, pela exposição. A professora Rita de Feria teve que sair em função de um compromisso previamente agendado, mas deixou uma pergunta com a professora Melina Rocha. Melina, por favor.
So, Professor Marta, Rita left this question for you. given the ongoing discussions in the European Union as regards reform and the removal of exemptions for financial service, to what extent do you think that the fact that we still have an exemption is a result of history, for example, path dependency, or said in another way, if Europeans were to introduce a VAT now, would we have an exemption for financial services? She suspects that we would not. So what's your opinion?
And I agree with Professor de la Feria. I think that this is, as I mentioned in the beginning, the list of the exemptions has been to a large extent simply taken from the legislations that were in place in the member states before implementation, before enactment of the 6th VAT directive. So it is a sort of a historical, traditional, following the pattern we used to have, and it's this repeated concern about, well, there is no easy way to tax it, let's just avoid the issue by exempting it. Having said that, I still believe that certain financial transactions are easier to tax than others. So perhaps if we were introducing VAT system today, there might have been much more narrow list of exemptions for some of the investment activities and investment intermediation activities.
Thank you. Thank you, Marta. I think Professor Isaías has a question too.
Yes, thanks for this broad survey of the state of the art in taxation of financial intermediation. This is really challenging, but as you point out, we are moving in terms of incorporating banking transactions and insurance in the VAT network. My question for you is the following. Since we have not yet managed to solve this problem of taxing banks under the VAT, what are the perspective of a more broad insertion of the financial activities in the VAT net, especially considering the treatment of derivatives, of repo transactions, repurchase agreements, and the lending of securities, which more or less have been giving adequate treatment under the income tax, but passes far away from the VAT base at this time. What do you see, any chance that in the future we can tackle those issues?
I think that the main problem that exists is, as long as we have some special treatment that doesn't follow the general rules, we will have issues of drawing a borderline between, either taxed or exempt, or even if it's a special treatment between those that should be receive the general treatment and those that have any special treatment. So these problems can, they still can exist. When it comes to including them in the tax base, I think the cash flow method already, in the way it was described and developed, provides for an excellent tool and a method to actually include such services also in the tax base.
That's very good. May I follow up? Look, this is a good way to go, perhaps, because if you put under the cash flow system, we probably take care of this complexity, introduce other complexity, but this one we can handle. But my question about this is it possible to introduce the cash flow method of accounting for the VAT in the financial sector alone, or this is make necessary to introduce for all VAT payers the same cash flow method?
Marta, sorry, just because we have a question here for our audience, and it's more or less the same question as Isaías just asked. So I would like just to add, this is from API, Bernard API. He asked to you if you can give some example of this cash flow model to tax financial service, this simplify and the other model suggested by the European Commission. So just to add on Professor Isaías' question. Thank you very much.
So answering both of those questions, I mean, for all other non-financial transactions, we don't need this cash flow. We just follow a normal transaction-based. It's easy to determine the taxable value, the taxable amount for transactions for sales of goods or services, so to speak, ordinary sale of goods or services. Everything that is given in return for a supply of goods or services is a tax, is a consideration. There is no cash out, any flow out of cash here. So that is the traditional credit invoice method that we have. We talk about cash flow for those transactions that don't fit this simple credit invoice method. So basically what happens is there is a bank, and now is my example, and the bank in a very simplified way. So there is a bank that there is a borrower and there is a lender, and the bank lends to the borrower a certain amount of money, but also gets a deposit from another person who is for a business, for example, who decides to deposit that money in the bank, and there is interest payment on both, right? So typically it will be a smaller interest payment to the person depositing the money and some higher received by the bank from the person to whom the bank borrowed the money. So all the cash in, we will have to basically impose, let's say, 10% of the tax on that for the moment that the loan is being received. For the moment that the loan is being received from the business to the bank, the deposit is being received, there is a money coming in, the bank will have to impose on that 10% of VAT paid to the tax authorities. What happens in the lending of that money also is that it will also include a percentage of VAT. Then in the situation that the money is being paid back by the bank after 1 year, after a period of time, to the depositor, to the person who deposited the money, that will involve payment, also a tax on that cash out, plus on the interest that is being paid. And vice versa situation will happen by the bank that will have to collect VAT on, so it will be treated as input transaction or output transaction, depending by the taxpayer if the money is going in or out. And so for every business, every taxpayer, it will be also assessed on that way. So it is out for the bank, but in for the business depositing the money. And VAT has to be then imposed approximately. So the problem in the simple cash flow method was that, well, you have to make some adjustments taking into consideration just this, some interest is only, part of the interest is only compensation for basically time value of the money, compensation for the fact that the consumption is postponed in time. So it includes saving elements, and you have to then disconnect it from, there should be no VAT on that. So this is one adjustment you have to make. You have to have this pure interest rate that is just an interest rate, interest for the time value of money. And I don't have everything in the back of my head of that method. It's much more complex than that. But another issue with that method was also that if you have all those cash flows going on, you will suddenly have so many businesses that will have to deal with those new tax obligations related to the money flowing in and out. And that is too difficult for them. You cannot administer a system like that. And this truncated system had basically a formula and ways of calculating and ways of through already implementing in the formula those adjustments, allowing to avoid those problems on a transaction by transaction basis. I'm afraid it will be difficult for me to be more detailed in that, but there is a very long and detailed report by Ernst & Young, if I'm not mistaken, done for the Commission, that describes that method. And European Commission has admitted everything seems correct with this method. It seems to be the beneficial way forward. That's the way that would be good. But it was the financial sector that was first of all, at that time, there was no current regulation. Well, the regulation of insurance and financial sector was slightly different than it is in place now, and financial sector was frightened that they will have to disclose their margins, and that method will mean that they will very openly and transparently show how much they are charging for what, and they didn't really want to do that. And they also said, well, this is also too complex. This requires too much change to the system. We are already used to what we have. Cannot you just give us more deduction, right? And don't do this complex system of taxation. So also the administrative cost was quite high. I am not sure why and whether and why not. I think it's not really coming, well, we will see with the proposal by the Commission whether and to what extent the discussion again will put into spotlight that cash flow method, also for the future treatment in European VAT.
Obrigado, professora. Melina, você não gostaria de fazer um agradecimento final à professora antes do encerramento?
So thank you very much, Marta. It was really, really good, your presentation. I received here many messages here saying, oh my God, this is a true, like, a class on financial service taxation. And we are very grateful because right now we are thinking about this, the way to tax financial services in Brazil in this tax reform discussion that's going on. So I believe your presentation today will help us a lot to better understand the options, the international models. So thank you very much. It was really good. And that's it, Eurico.
Obrigado, Melina. Obrigado, professora Marta, mais uma vez. Eu queria também agradecer a todos e comunicar que nós temos mais de 400 pessoas acompanhando o evento, mais de 350 pessoas inscritas diretamente pelo Zoom, mais participantes pelo YouTube, não é, que estão acompanhando indiretamente pela internet. Então, queria agradecer muito a nossa diretoria de comunicação da GV pelo empenho na realização desse evento, agradecer todos aqui presentes e, em especial, agradecer a professora Marta. Muito obrigado, professora.
Thank you very much. It was a pleasure.
Bye.
Obrigado e encerramos o evento e fica o convite. Melina, quem vai falar no próximo encontro, no nosso próximo evento?
Semana que vem nós temos o professor Joaquim English, que também é uma autoridade na União Europeia, e ele vai falar sobre economia digital. Então, todos os problemas, como está sendo regulada a economia digital pelo IVA internacionalmente. So, just in English for the YouTube viewers, next week we have Wednesday at 10 a.m. Brazilian time, the participation and presentation of Professor Joaquim English, who is an authority on VAT in the European Union and all the world. So he will talk about VAT and digital economy. So it will be a great pleasure to have him here with us next week. Thank you very much.
Obrigado. Até o próximo evento. Obrigado.